All right, welcome to Building Digital Relationships with Credit Union Members. I'm your host, Reagan Bonley, CEO of Nudge, former JP Morgan executive, and I'm thrilled to be joined by Kelly Chambers, former CMO, CTO of Heritage, former Senior Director of Betterment, and Austin Hopkins, the former Director of Teachers Federal Credit Union and host of one of my new favorite podcasts, The Introvert Leader. Welcome, gentlemen. Thanks for joining.
Thank you.
Thank you.
Would love to have you both introduce yourselves just briefly, a little bit about your backgrounds and what makes you interested about this topic.
For sure. You want to go first, Kelly?
Sure. I'll take it. Yeah. Kelly Chambers. Nice to see everyone. Thanks for inviting me on, Reagan. Like Reagan said, I was former CMO, CTO at Heritage Credit Union. I was there for about 7 years. Oversaw IT, marketing, analytics, and member engagement as well. So, it's something I've had experience with and I love. And then I sort of brought that experience into fintech. Spent a year working with startups. One of the startups I was with was bought by Betterment. So spent a year there launching a cryptocurrency investment portfolio product at Betterment. A lot of customer engagement there as well. So this whole topic is just a big value driver and incredibly important for credit unions, I believe, in terms of engaging members. So.
Awesome. Great to have you.
Great. And as I mentioned, or as Reagan mentioned, my name's Austin, and spent, I think, over 15 years in the financial industry working in banks and credit unions on both coasts, and kind of figured out what made members tick, what made customers tick. And then about 6 months ago, decided to do a 180-degree shift and start a podcast. And have now been doing that for the last 6 months, where I basically teach and talk about career development, leadership strategies. And I love this topic specifically because something I don't ever take for granted is the ability to work in the financial industry and what it kind of taught me around being really financially smart and making good decisions. So love this kind of topic and happy to be here.
Awesome. Great to have both of you. I've had the pleasure to get to know you both, pretty decently over the past few weeks and months. And I can tell you both are a wealth of knowledge, so excited to dive into it. A little bit about us. Nudge is on a mission to helping credit unions level the playing field with big banks and fintechs by delivering next level financial wellness strategies to engage, retain, and grow member relationships. So we'll be covering a few things today. We'll talk about the importance of digital relationships, developing digital strategies, personalizing those experiences with financial wellness, and leveraging tech and emerging tech as part of those conversations and interactions. So let's dive into it. About importance of digital relationships. Austin, I have a question for you. So we've been in banking for about the same period of time, and I'm sure you saw the transition in the branch from people being in the branch, doing business in person, to moving over to digital. So I've always viewed the relationship between a credit union and myself as based on trust and advice. Advise me towards the best products that will improve my financial health, and at the same time, make sure that I trust you to make sure that my assets are safe and can grow soundly. So how have you, in your perspective, seen that relationship with members change over time?
Yeah, it's a good question. And, I started in banking in 2008, and it seemed like at that time, it was really transactional, right? When members or customers came in, it was all about efficiency and taking care of that initial need. In fact, I remember I was held accountable to how quickly we could get somebody out of our branch, which is just so mind-boggling to me nowadays, right? That's the exact opposite. So, it started really from an efficiency standpoint. And, for major financial problems or situations that people would have, they would go to maybe their financial advisor, or even worse, maybe a friend who didn't even know anything about the topic or knew less. And then it seemed like over time, it started to kind of shift more where members and customers expected more from their financial institution, right? They still wanted help with those pressing transactions, those quick things that they came in for, but they also wanted financial guidance for the big life events, right? We're talking marriage, having kids, divorce, all those big things. And I think the credit union and banks who did it best realized this early on and focused on helping members through those important pressing life events, as opposed to just, hey, what can we sell you today? What can we do to get you in and out of the branch as quickly as possible?
I totally agree. Yeah. We'll talk about this in a bit, how certain things are still done in person and certain things are done online. And it's interesting on the types of tasks that are still done in person. And, we'll really dive into where a credit union can leverage that strength to build some stronger relationships. So, Kelly, curious for you on, the impact of some of these things. There was a recent Financial Brand article, and it suggested that client engagement, not necessarily client experience, is the next opportunity for credit unions. So tell me a little bit about why this is important and the results that we've noticed when credit unions do this effectively.
Yeah. I think that's important to differentiate between experience and engagement. In some ways it's semantics, you're arguing over what word means, but if you look at experience as it's a point in time, it's how someone engages with your app, or it could be in branch as well, but your app or online banking or loan application. A lot of those things can be made to be very easy to use and low friction, right? That's the experience that they had on their app. But engagement to me is a longer term thing that you're looking at. It's all the little experiences that add up over time. And that engagement can look different at every credit union or bank or business, quite frankly, right? I think it's important, a good example of really to distinguish between the two is you have fintechs and startups who create amazing member experiences or customer experiences, but a lot of them go out of business because they can't engage the user at the end of the day over a long-term period of time. So to me, that's kind of the core differentiating factor between experience and engagement. And a lot of financial services products, the products themselves aren't that engaging. A checking account, to a certain degree is the same no matter where you go. But the key to success there is how do you make that whole process of interacting with you to be actually enjoyable? Really look at all the touch points and map that out and create a long-term engagement plan. And engagement can look like a lot of different things at different credit unions. It could be a rewards and loyalty program. It could be content education. There can be in-person touch points as well. So really, looking at engagement to tailor it to your target market, depending on the credit union.
Right. Yeah. Great points. Absolutely. And we'll dive into some strategies specifically related to that. So would love to pivot into developing this digital strategy. So Austin, I have a question for you. You've done a lot of work around developing and implementing digital strategies with different credit unions. So this requires a lot of work with balancing the priorities of the credit union and the member. So would love to hear from you, in your perspective, how you have prioritized the member's needs and at the same time, used your leadership to create that culture around keeping the member first.
Sure. Yeah. I think it's interesting, right? I think the primary focus at all times and all decisions and everything that a credit union or a bank does should be focused on what does the customer need? Now, a lot of people think, well, we have a balance sheet and we need to focus on the goals of the credit union. But I have found that when you focus maniacally on what does the member need, what are they going through, what can we do to help them get from point A to point B, the rest of the things kind of take care of themselves, right? You're going to get more loyal customers, more loyal members. You're going to get them to refer their friends and family, which is going to grow your membership base. So I think that's number one. The second thing, and you kind of touched on it a second ago, Kelly, is reducing friction. That is the name of the game, right? I grew up in the banking industry, and for a while, we made things difficult for members. We did not make it easy, right? They would have to come in to accomplish simple things like changing an address. That's not where it is these days. Members, they want to be able to do things on their time, how they want to do it, and they don't want friction, right? That's the last thing they want with a banking institution. So I'd say those two things are kind of the big strategies that we've used to really help connect better with members.
Absolutely. Those are great points. And, it's interesting, Kelly, maybe you can chime in on this. We were looking at these things on the recent Jack Henry report on the top priorities, the strategic priorities for credit unions over the next couple of years. And we find that implementing data and analytics is the top priority for credit unions. Number 2 is growing deposits. And then there's a tie for 3 related to providing a better experience and engagement for that for those members. So we'd love to hear your perspective, Kelly, on how you can think about some of those things from the priorities of the credit union and the priorities of the member.
Yeah, absolutely. I think if you look at this graphic here, growing loans and growing deposits are sort of always, they're always priorities, right? And so now we have data coming into play much more over the last decade, and now potentially with AI and member engagement. And so there's a lot of new ways to look at that. So I think going back to Austin's comment about focus on the members' needs, I'd almost think of it too like a Venn diagram. Take the members' needs and the credit union's needs, because there's a lot of things you can focus on that would help the credit union out, fee income, things of that nature that may not actually be the smartest moves long terms or be in the best interest of the member. So if you look at it like a Venn diagram, where does that overlap match up if you're trying to manage the realities of running a credit union, but also meeting the members' needs and serving them better than a large bank or a fintech competitor potentially as well there. So really focusing on those needs and leveraging data to do that, I think is just an incredible area to focus on over the next year.
Yeah, I certainly agree. I mean, if you look at the number one, leverage data and strategic insights, it's like, okay, that's great. And you can, send some timely pieces to the member, but is that really adding value to them?
Right.
Is that helping them improve their financial lives? So, we can be more timely in our approach, but are we actually like helping them move forward in their finances? So
Exactly.
certainly some great points there. So now I'd like to touch on the balance between digital and physical. So I'm going to stay on you, Kelly. Ron Shevlin recently posted that the neobanks have won the checking account war, unfortunately. And it's been said that digital is now the preferred channel over physical. But at the same time, as we mentioned before, members are still going into the branch for some certain things that aren't available online, or some more complex tasks. So from your diverse experience, would love to, if you can tell us the magical mix, and we can hold on if you need to get your crystal ball, but the magical mix between physical and digital and, what that looks like.
Yeah, absolutely. I'll start by saying I think we're absolutely in a digital first world. I think most people will accept that, and most credit union management teams have. But when I look at my experience, both pre-COVID at the credit union, and then with startups and fintechs over the last 2 years, it's very much digital first, but at the same time, I'm seeing there's key places where human interaction, and a lot of times that's just over the phone, or if you're doing actual chat with a human being, are incredibly important. And even with some of the best fintechs I've worked with, so I would recommend for a management team, if they're trying to wrap their heads around this, it's not all or nothing. It's not, just for certain demographics. I would look at it like a spectrum. You could actually sit down as an exercise and map out all of your member touch points. And it may be by product, by service line, by channel, however you want to kind of look at that. And do it by complexity. I think what you'll see was sort of what you're hinting at is the more complex things get, the more human interaction is important. And if you are only digital first, you will lose people at certain points in time. And for some people, it is just using the product can be complex. For other people, it could be just much more complex transactions. For example, personal story, my mother-in-law's mother just passed away. She was 102, lived a wonderful life. But now she's dealing with, I think 10, 11, 12 accounts at different institutions. That process, I don't think it will take decades to fully digitalize that process. And I think credit unions can identify those processes and really play to their strengths, where they're there to help their members at the end of the day. So I think that's a great way to engage members and understand which touch points it matters most for the demographics you're serving for your target market.
Those are some certainly great points. I'm curious, have you seen technologies, Kelly, that where, you're using, it could just be, maybe a CRM that's providing insightful data to, your frontline workers. But is there, an effective strategy with using that healthy balance of, maybe for a fintech, maybe you've experienced this in Betterment or, at a credit union, but like, how do you make sure that it's not only digital, but you still get that human interaction?
Yeah, that's a good kind of question to dig into that I didn't touch on. I think one of the things that I've seen done personally with fintechs, I'll take, for example, email marketing. If you have a new member, right? A lot of credit unions will have sort of drip campaigns, emails or push notifications. Really, it could be every single email has the option to chat with someone in person or call them in person, or you pick certain emails where you think that matters. So really mapping out all those use cases and understanding where do we feel like we want to give the option to have that in-person contact. And it may be every touch point if that's what you decide as a management team. But even when I was working with a crypto startup, we would have phone calls every single day with users, and crypto is, cutting edge new technology. But those phone calls were incredibly important to create engaged customers of the startup. Same thing for members, picking and choosing based off of your member demographic, what matters the most, and integrating that into those touch points. I think optionality is kind of the takeaway there.
Yeah, absolutely. Yeah, no, those are certainly some great strategies. It's interesting. It also begs the question, like you mentioned, some more complex things being done in person. Over time, as I've managed different teams of advisors and bankers, I've recognized that there's still a knowledge gap with some frontline workers, and they may not be able to, all of them, be able to help with things like those trusts and estates or more complex wealth needs and things like that. So just, it'll be interesting to see how things evolve, as you want to deliver financial wellness to everyone. Is it a matter of skilling up your frontline team, or is it improving your digital channels to really tackle those needs there?
Right.
Would love to get your perspective on this, Austin.
Yeah, it's a good topic, and I would say I think it's both what you said, Regan. And one other thing that comes to mind too is focusing on those interactions or those touch points where your credit union is the best. Maybe those are the ones that you prioritize in person, right? You want your best staff interacting with your members on those most important transactions. So that's something else I've seen is where are you best at? Maybe prioritizing those as human contacts, and where are the things that maybe doesn't really matter as well. You can push those things to digital. And I think it's also about frequently checking in with your members. So the credit unions that do it best are doing voice of the member surveys frequently. They're asking them what's working, what's not working, and they're making micro adjustments along the way.
Absolutely. That makes total sense. So let's pivot a little bit to personalization with financial wellness. So kind of on the same topic, but Austin, a question for you. There's a lot of talk about digital financial wellness being the new strategy in terms of member engagement. And at Nudge, we have some stats around this. We know that when a member feels like their credit union cares about your financial health, they are 5 times more receptive to cross-sold products, three times more satisfied with their credit union, 3 times more likely to be a net promoter and refer your credit union to friends or family, and 2 times higher likelihood of retaining. So curious from your perspective, what are some ways, if we think back, let's think back of, when we were in the seat, both you and I, Austin, clients were walking in the branch, members were walking into the branch, and we were building those relationships through personalization, financial wellness. What were some of the things that you used to do? And let's see if we can connect the dots between in-person and digital there.
Yeah, it's a good question. So I would say 3 things come to mind. Number 1 would be assumptions are the enemy. So not assuming I knew something about the member based on what they looked like, based on the balances in their account, because we really don't know the full story. So that was the first thing, is just coming in with no assumptions. I think the next one it goes to a robust discovery, right? The times where I was most successful is where I spent most of my time asking questions. And the credit unions that do it best, they ask tons of questions. They might spend 50%, 60% of the interaction just figuring out what the members' financial goals and priorities are, because let's face it, a lot of times people don't even know what their goals are. They haven't articulated. They haven't even had someone ask. So going into your credit union or bank and having someone sit down and say like, hey, where do you want to be financially in 5 years? That's a powerful question, and it gets people thinking. And I would say the last thing is more like just treating members like a family friend or a family member, right? You're going to give them the very best, right? When my family member says, hey, like, where do you think the best bank is? I'm going to tell them exactly what they need to know. It's going to be the very best strategies that I use personally. So I would say that would be the last thing, just treating those members like you would a friend or a family member and giving them the real information, the stuff that's really important.
Absolutely. I love that. Those are some great insights. And I personally experienced that as well. I had a client that, I used some of those strategies on, and not necessarily strategies, is, obviously about helping the member, right? So this one in particular that comes to mind is she turned out to be one of my favorite clients. And at the beginning of the relationship, I only had a very small piece of her overall wallet. And I thought that I probably wasn't going to get the whole relationship because she had a pretty robust financial planning team in Manhattan. And I'm this one guy in Chase Bank and, probably can't add a ton of value, but I knew, okay, well, she's my client. I'm going to give her everything that I can. So I did the full plan, rolled out the red carpet with my whole team. And one day, about a year into the relationship, she called me and she says, I didn't realize that you even factored in my gardening budget. And she said, okay, well, I'm going to bring my assets over to you. And this small thing, this $200 a month that she logged in online and saw this budget that I had set up for her, she realized that I'm really caring about her overall financial plan. So she then, shortly after brought over her millions of dollars, but just that personalization, wherever it was, that was an online experience and also in-person interactions, but that certainly propelled that relationship and, made it quite stronger. So I want to take the conversation in a little bit different direction, but at the same time, talking about gathering information, diving a little bit deeper, but more from a data perspective. So, Kelly, let's talk about that. Many credit unions have talked in the past several years about creating that 360-degree view of the member. But at the same time, many credit unions haven't effectively either implemented that process or taken that view and that data and translated that to personalized recommendations to the member, again, adding value. So help us understand, how credit unions can effectively build this view. And then we'll get into some, how we can communicate that.
Yeah, definitely. Well, I'll start by saying I love what Austin said about assumptions are the enemy. I think on the data side, viewing your database, wherever your data lives, as the answers to questions you have, and don't assume things about members. So find ways to collect data that is organic and natural. Maybe it's through surveys, maybe it's through their behavior. I think that will tell you a lot more and allow for, to use Austin's word, discovery, to learn about your members, to create that 360-degree view to end up with that. But I think approaching it as we need to build a 360-degree view as the goal is the wrong starting point. I think stepping back and asking, what are we going to do with the data? What is the goal of this? So sort of two exercises you could do is list out every use case, that your business use case, business problem you're trying to solve for at the credit union. That could be, how do we reduce member churn? How do we increase checking account penetration? List all those out. And then once you have those listed, also kind of cross-reference them with where does it overlap with the member need and the credit union need. I think that's fundamental, so you go in the right direction. And then there's something called the business analytics spectrum. And you can use that tool. I actually have a LinkedIn post up right now. I think, Reagan has a screenshot of this. It's a pretty easy sort of matrix that you can use to plot out where all of your data projects would fall. On the the bottom right corner, you have descriptive analytics. That's things like your daily, weekly, quarterly reporting that you have to do. You spend a decent amount of time on. They don't create the most value, but they're fundamental to do. And then as you work your way up on the other spectrum, you have something called prescriptive analytics. That's actually getting into like, what should we do next and how can we make it happen? Sort of close to predictive analytics, trying to predict which members may churn, that sort of thing. But this will allow you to plot out the different use cases and projects that you may want to implement. And then pick based off of difficulty and the value it's going to create and the resources you have, which projects to focus on. And the outcome of that is going to be a 360-degree member view or something close to that. Otherwise, if you say we want the 360-degree view, you're going to spend 12 months trying to build that out and then sitting there with a bunch of data, wondering what to do with it, or have some failed attempts at trying to cross-sell or something like that. So that's sort of the approach I've taken at multiple organizations.
It's a great perspective on that, and really, a clean and easy process to start thinking about, some of those things and where you fall on that, maturity level of analytics. I want to get your take on something, Kelly. JP Morgan's wealth plan, they were recently recognized as the best digital initiative and best use of technology for identifying financial goals of users and then taking that data and helping create better recommendations. We've since seen US Bank, Bank of America implement similar technologies. So from a data perspective, what kind of gaps are we filling with things like that?
Yeah, I mean, it depends on the sophistication of the tool you're building out too. For some credit unions, building something like that may be far off, and that's okay. You don't necessarily compete head to head. But in terms of engaging members, a tool like that, customized to your credit union's sort of business model, I think will go a long way. It will create efficiencies, which is important, but at the same time, create higher engagement with your members at the end of the day. So I would not recommend going to try copy and paste what a big bank is doing, right? And that's easy to get in that mindset. We need to keep up, whether it's with a fintech or a big bank, or even just a larger credit union. Look at the resources you have. Take ideas from these larger banks and sort of apply the concepts to what you're doing.
Yeah, that makes total sense.
Can I add on something to that? Because I think you hit on something really, really important there, Kelly, is I think for so long, it seemed like there was an approach that credit unions thought, well, we need to compete with banks, right? We're competing for the same clients or members, and we need to be exactly the same. I'm almost finding that the credit unions that are most successful fully lean into the fact that, hey, we are different, that we have a different experience, and that you're choosing to come to us because it's going to be more personalized. It's going to make it feel like it's someone who genuinely cares about me versus just being a number on a balance sheet on some report somewhere. So I really like that you said that.
Yeah. One thing working with startups and fintechs that I've always believed, but believe even more now, is don't compete if you don't have to. If you can find a different way to succeed, whatever that looks like, don't compete if you don't have to. The
I love that.
For everyone, if it's not a zero-sum game always.
So true.
A lot of times in conversations that we have with credit union executives, we hear that they are trying to compete with big banks. It is a big benchmark, and I can see that, but at the same time, credit unions, they have so much going for them. I mean, they're rooted in the community. They're focused on financial wellness. I mean, that is the strength. So I think now, is a great time to use strategies kind of like what Austin used to do in person, but do that digitally, learn about their customers, create that full understanding of the member, and then provide those personalized recommendations throughout the experience. So, so Austin, thinking about, okay, now we got the data. I'll ask you now, how do we communicate that? How do we make that effective and market that to the member?
Yeah. So I think a couple of things come to mind on that. One would be really equipping the frontline staff or the folks that are interacting with members with a really robust CRM that integrates all of the different interactions, patterns, data, and all of the systems. So spending time in the credit union industry, I've noticed a lot of times they're piecemealing their different systems. They're grabbing this system from here, from this company, this system over here. And a lot of times they don't talk to each other. So then when a member goes onto their online banking, we're dropping the ball, right? There's information that we should have that should be, prompting personalized offers, but we don't have that because the systems aren't talking to each other. So I would say a robust CRM is number one. It's going to make sure that all of your tools are working together the right way. And in those, frontline staff interactions, they're going to be more prepared as well. And then the other thing I would say too is credit unions that focus on that omni-channel approach, right? Where whether the member visits the branch, they go to the website, they go to the mobile app, they have the same experience. They leave better than when they came in. That's the big thing, right? So we got to make sure to not discount those interactions when it's 11 o'clock at night and they go onto their online banking and thought, oh my gosh, I got to turn off my debit card. They still need to be able to do that really quickly, get it taken care of, and feel good about that experience.
Awesome. I love that. I want to double click into the CRM. Obviously we had a tool at JP Morgan, and, I had different alerts that would pop up for frontline folks. What are some things or actions that, could better prompt a frontline worker to provide more personalized recommendations? To give you an idea, we had, large transaction, if there's a large transaction that goes through the account. What I'm trying to understand is, are there things that could be even more personalized? Large transactions are life events of sorts. Something happened, big purchase of things like that. But, are there other things that we can, dive a little bit deeper on? Thinking back maybe on how you would fact find, with a member, when you were a banker. Yeah. Love any thoughts.
Yeah, I think, the one thing, and I always go back to this in my time in the credit union space, is that people's spending patterns will teach you almost all that you need to know about a member or a customer, right? It's right there in front of you. So you're going to see, well, how many, streaming services does this person have? And, it looks like, oh, hey, they're constantly sending money between 2 or 3 banks, right? So things like that, just even their normal checking account transactions used to be just a gold mine at figuring out kind of what members were working on, what things were working, what wasn't working. And then as well, I think it's really just kind of listening for those cues and clues, because members will clue you into what's next, right? They're going to ask questions. They're going to go onto your website and go to the chatbot and type in a question about like, hey, what are the rates at right now? Ding, ding, ding. That tells me, hey, maybe we should link them up with a mortgage officer who can actually have a in-depth conversation with them and take them to the next step of home ownership.
Yeah, those are great points. And it's interesting because, I agree. You can see a lot from those spending patterns. It could be, a high amount of spending related to the high amount of income, or a relatively low amount of income. You can kind of sense certain things, but there could be more analytics there. One thing that we do is, through understanding transactions, we're able to model out different behaviors of members. Is this member an ostrich? They tend to stick their head in the sand and ignore their finances. Or are they more of a spender? They tend to be a little bit more flamboyant with their spending. So, while we can kind of discern some of those things working one-on-one with a member, there's quite a lot to tell that, sometimes a simple glance can't quite, really tell the full story. So that actually kind of brings me into the next conversation around PFM. So, the bigger conversation is really around leveraging tech and emerging tech, but I wanted to, stay on this topic of personalization, communicating recommendations, but at the same time, talking about some specific technologies, whether it's AI, chatbots, CRM, PFMs, things like that. So Kelly, there was a point in time in the past where account aggregation PFM was a must-have. And then fast forward a couple of years, we find out that, okay, it didn't really produce, quite what we expected. Adoption only resulted in 12%. And then now there is another article that came out July 12th that says the next big thing is PFM once again. So what do you make of this? And I'd like to kind of hold the thought of what Austin said, because, there's a lot that goes on in that account aggregation. All those transactions, is it really telling a story to the member? Is it adding value to the member? But anyway, we'd love to get your take on that, and then we'll dive deeper.
Yeah, I think it comes down to creating value both for the member and the credit union. And the PFM of yesterday, when I was a credit union's CMO, CTO, I was the first to try to avoid implementing one because the adoption metrics were so low. But that PFMs, it's sort of semantics. It's evolved over time, right? There's a lot of things that some people consider PFM technology. So I wouldn't get too hung up on the language if someone's calling something a PFM. I'd really, again, going back to the use cases, the business problems you're trying to solve, and selecting the right technology to do that. Transactions can be incredibly valuable to help the member and to create business valuable if they're used properly. And if you can find out how to do that, I think PFMs 10 years ago, it was just a budgeting tool that put a lot of work on members, right? Whereas in this day and age, if anyone has sort of that bad flavor in their mouth of PFMs of 10 years ago, maybe reconsider, like, set aside the term PFM and just look at the technology and what are these new technologies able to do in terms of the value they're creating. And there's a lot of platforms that have these things built in that aren't necessarily labeled as PFM. For example, in Workday Betterment, if you open an account there, they're helping you forecast and helping you meet your goals. And aggregating accounts. A lot of places do that. I'm sure a lot of credit unions on the call today are doing that. And so I wouldn't get hung up on the term PFM. I'd focus on the technology and the value it's creating at the end of the day.
That's great perspective. Yeah, I've certainly seen the same challenges. Obviously we know that the transactions are not properly categorized, so that creates more work for the member in trying to categorize, and hence, the only 12% adoption. One thing that we're seeing is that millennials are adopting it at double that rate. So about 24 to 26%, I believe, in that range. And it's said that to really make this a widespread adoption, and this is, just like you mentioned, it's a labeling issue as well. I mean, this is talking about budgeting features. How many people are using like a Mint.com type of thing? So people have said, well, you got to get them to care about the categorization, care about budgeting. We look at it a little bit different. While we are not a PFM, we do provide the infrastructure for some of those things. We believe in making it easier for the member, providing real outcome-based recommendations. What is the impact? For example, if we notice through spending patterns that member is spending quite a lot on dining, well, you told us, member, that you want to retire a little bit earlier, put your kids through a nicer college, travel in retirement. Well, if you spend a little bit less here, that can result in achieving your financial goals a little bit better. Things that could be done in person by sifting through transactions, providing advice over time. We're able to do a lot of that heavy lifting on the front end, really just by learning through transactions and providing a better experience that way. So Austin, would love to learn, from your perspective, if there's other tools that you've used to provide a personalized approach in your, with the companies that you work with.
For sure. Yeah. So, I think a couple of things. One is, really making sure that anytime a member has an interaction with your institution, that you are, I don't want to use the word logging, but you're taking note of that and you're storing it in a place that kind of contributes to the overall financial picture of that person. So for example, you mentioned a second ago, if you saw a big spending on dining, right, that might be a red flag to say, hey, you wanted to retire early. But we can also, to take it a step further, is say, okay, you're spending a lot on dining. We have this amazing card that pays you 2 or 3 times on dining. Have you thought about actually using a credit card instead of using your debit card, for example? So I think you can make really, really good personalized recommendations for your products and services using that information that you've kind of gathered already. And people are going to give that information to you in all different ways, right? It's going to be, what are they searching on your website? It's going to be, what are they calling into your call center and asking about most frequently? Or what are the most common transactions they come in for? Gathering all that information, and then again, giving those personalized recommendations with your amazing products and services.
I love it. I love it. Kelly, any thoughts on that?
Yeah, no, definitely agree. In sort of the tech world, or if you go talk to your IT team, that logging is essentially event tracking. And it does take resources to do. So pick and choose where you want to dedicate resources to log those things, especially if it's digitally done, if it's not a human being doing it. In fact, it takes more resources if your frontline staff is doing it, right? But 100%, record the data that matters. Going back to the idea that the database is like the fishbowl of answers for all the questions, right? And I think then what you can do with that is also going back to what Austin said about having a robust CRM, whether it's CRM, MCIF, whatever kind of terms your credit union is using. You can start to test more advanced things with that data without going and purchasing, $100,000 predictive modeling software. When I was a CMO, CTO, the first predictive model we created was using Excel. And we were able to create a regression model in Excel and then take that into the CRM and set up essentially decision rules. Most CRMs support the ability to set up rules based off of the data that lives in your CRM. So it's complex, right? There's some math and stuff behind it, but there are some, smaller proof of concepts you can do to try to do more advanced things and test them before you go make larger investments in that. So
that's helpful insight. I'd like to understand the actual results on some of these things. So let's talk about conversion. My benchmark for conversion on digital strategies, and this may be like digital marketing with a moderate data strategy, I'm hearing about 2 to 5%. Then I've talked to some national banks, some larger banks, and I'm hearing that with a 360-degree view, personalized recommendations, closer to 8 to 12%. How do you both see this in terms of just an overall strategy, or maybe specific strategies with credit unions? What might be more effective and what might not be as effective? I'll just ask you both.
Yeah. I guess the initial take, I think those numbers are pretty in line with what I've seen historically. The one caveat I'd add is there's definitely a difference between the marketing channel. If you're looking at it through a marketing lens, different channels will potentially have different conversion rates, and the product as well, different products. But I've very much seen sort of automated marketing programs that are using the right data at the right time with the right member. And sometimes those conversion rates are 10, 20, 30%, depending on the product and the environment. For example, if you have a high yield savings account, you're going to see much more higher conversions probably over the last 6 to 12 months with rates increasing, right? So being aware of what's driving those conversions too. But yeah, personalization will go a long way when done right with conversions.
30% sounds great. I'll take it.
Yeah, right. Yeah.
What is there anything specific on that? Like, is it just like right product, right time, right messaging type of thing?
That case, it is very much right product, right time, right messaging. A lot of times that's harder to scale, right? Because if you're targeting members and like a retention or loyalty sort of effort, that's harder to scale. So there's limitations to that. But I think the strategy to take with that is to have it be like an always on marketing approach. Don't run a campaign that takes you 3 months to set up for one email send and then it's done. Find ways to integrate that into your CRM or your marketing automation. So it's targeting the right people. Doesn't matter the day. It could be the day before Christmas Eve. For some people, that is the right time. For example, at Makara, the startup I worked for, the number one day for our referral program was Thanksgiving Day. Because everyone's sitting around the table with their families and friends and referring people to use our product. So then we built out communications around events, around holidays, and anyone who referred clients was, by every metric, a much more valuable client and a much more satisfied and engaged client. They engage with content more and education more as well. So finding those points of leverage that you can then kind of lean into to help the member out and the credit union is important. And that's different for every credit union. So
very interesting. So Kelly set a high bar. So Austin, we need 35% conversion. You could use a different holiday, but
your average of 10% is good though, I think.
Okay. All right. Any thoughts on this topic, Austin?
Yeah, one thing I think Kelly mentioned that I think is so crucial is consistency, right? I don't know about you guys, but I don't always make quick buying decisions. Sometimes I need someone to tell me the value of something 10 times before I'm ready to do it. Even though I probably know it's good for me and they've told me once or twice, I need to hear it over and over again. So I love what you said about consistency. And it's not just one time, here's a personalized offer, or here's something we think you should do, but it's multiple ways. And it's also saying it in multiple different ways. Sometimes we need to hear those messages in different ways. So I think that would be the other one for me, is just consistency and varying the information and how you're presenting it to the member.
Second.
Absolutely. Yeah, I totally agree. One of the processes that we use in Nudge, we've done significant testing around this, is taking them through a journey, a simplified journey, very similar to what you mentioned, Austin, in person, is understanding their goals, providing them with actionable insights, and then making some recommendations. And from that, we've actually seen that as users go through that journey, members, 87% act on at least one recommendation, and then still more than roughly half act on 2 recommendations through that journey. Is adding, understanding, parroting back what they need, and then providing some actionable insights there. So have one more question, and then we'll move on to the Q&A. So I'll ask this to you both, but I'll tee it up by giving you a couple of quotes. This came from an ATFIS report. On average, 58% of respondents are interested in using a virtual coach to meet their financial goals. And another quote, 85% of people are definitely to possibly willing to share information to obtain personalized advice. So thinking about some of those things. Now, at the same time, I feel like ChatGPT became a thing, and it was almost like generative AI was like shotgunned into different chat bots out there. I won't name names. And then the CFPB issued a warning on these chat bots. So I feel like we might be in a little awkward transition, but at the same time, it seems like members want more, in terms of digital advice. So, where do we go from here? I'm, curious on where you both see the future in terms of digital relationships.
Yeah, I'll go first if you don't mind, Kelly. I think for me, AI is it's not going anywhere, right? I think it's completely changed the world, and I think the credit unions that are smart are going to absolutely integrate it into their chat bots. And so I think there's always going to be a relationship to have that in place. But I also think that as we continue to roll out AI and make it more intelligent, we have to know those trigger words or those things that need to signal a human interaction. So that's kind of my view on it, is that we're always going to have that need, but there also needs to be intelligence to say, hey, if someone is asking a question that if I give them this quick answer, that's not going to be sufficient. And really we should drive them to maybe an appointment or to an interaction with someone over the phone. I think that's going to be the key. So it's kind of a balance of both, but credit unions who are scared of it are going to be left behind, in my opinion.
Yep.
That's a helpful take.
I would agree with that. Balancing human interaction with AI is going to be incredibly important. I think too, a lot of it comes down to risk management too. So getting the executive team involved, understanding all the risks of AI and the different use cases for it. There may be areas where there's less risk to trial. At the very least, we are in that awkward transition phase, right? I can 100% agree with that. But I would say don't stand by and watch. From my conversations with fintechs, different types of fintechs, everyone is trying to use AI to create value. And I think that's where you could lose, where you will have to compete to a degree, right? There's certain technologies you have to adopt over time. So at the very least, test things internally, understand how they're working, trial the things that are low risk. Even if you don't think they're maybe going to take a lot of value, look at it like a proof of concept to understand we can implement these technologies. We know how to do it. And then when the technology evolves to create more value, you're ready to do it as well. There's other areas too in the lending space. There's vendors like Zest AI, I believe. There's different vendors who have been in the market a little bit longer, who have built regulatory relationships that I've never used Zest, full disclosure or anything, but there are vendors like that exist that you could explore for other use cases beyond a chatbot, for example, to kind of trial. And then as you use AI for different use cases, you can start to use it across the credit union, potentially back office and member facing.
Awesome. That's great. Great insight. So I want to use this time to transition to the Q&A, but before we do, just a brief recap. We talked about quite a lot, the importance of digital relationships. I think the theme of personalization is pretty clear. Developing a digital strategy, so what you can do to leverage your team and think about the needs of the member through that conversation. Personalization, again, with as it relates to financial wellness. So thinking about the needs of the member, needs of the credit union, where's that overlap, and how can we think about things that we can prioritize to provide value and insights to the member to improve their finances, and at the same time, be timely and relevant to them, and then leveraging technologies and emerging tech to help you in that effort towards essentially supporting the member there. So before we move on over to the Q&A, which you'll definitely want to stick around for, I'll give you a little bit of insight on what Nudge does to identify some of these challenges and solve for these problems. Through our process, we collect quite a bit of information related to the client to fill in that 360-degree view, provide a powerful experience to collect that data in a matter of minutes, a gamified experience that allows the credit union to cross-sell products effectively, and then, as I discussed, some behavioral modeling to provide some pretty robust analytics at a member level, and then following that up with some AI-powered nudges that will keep the conversation going. It's timely, relevant, based on products. Keep your brand at the top of the mind of the members. If you'd like to learn more, feel free to request some information at nudgecu.com or with the email address here at the bottom of the screen, hello@nudge.solutions. So we'll move on over to the Q&A. We have several in the pipeline, but we'll probably only have time for a few, considering that we have just about 5 minutes left. So we'll be respectful of your time. Austin, we'll start with you. With younger generations, it has been more difficult to attract them to the credit union versus a neobank, for example. What sort of impact do you see from that effort on boosting digital engagement with this demographic?
Yeah. So, I think something about millennials, and I'll count myself as a millennial, is it seems that there is much more of a focus on doing business and connecting with people that have a similar why to you, right? So we want to do business with people that maybe believe what we believe or care about the things that we care about. So I think credit unions can do a better job at really showing people what you mentioned earlier about what they do for the community, and really what is the impact that banking with that credit union can have on the community, can have on themselves. I think that's one thing. And then I think as well, they're looking for the best technology. They're looking for technology that meets them where they want to be met, that allows them to get stuff done, right? They're not wanting to go to the bank and stand in line. That's not something that they've even grown up doing, right? So I think it's kind of understanding what's important to them, and then connecting that why is the other big thing.
That's helpful insight. So next question here. And then, by the way, if we don't get to all the questions, we're going to, team and I, we're going to provide some detailed responses. We're going to put together a PDF. So we'll send that out to everyone. You'll get a copy of the recording, PDF, and our case study. So don't worry, we'll make sure to address everyone. So next question, and I love this one. Kelly, in my credit union, we operate off of a very limited IT budget. What are some strategies you've used to implement new technologies and get them approved?
Yeah, that is a good question. And I'd almost recommend this approach, even if your budget wasn't limited, because the approach I'll talk about gets you in the mindset of really testing before you kind of go all in. I like the concept of, shooting a bunch of little darts, seeing what sticks, and then going all in for the bullseye. So I mentioned it earlier, but really looking at things through a proof of concept lens. I'll use the example that I touched on earlier about predictive modeling. So at Heritage Credit Union, when I worked there, we built out 3 different types of predictive modeling. Like I said, we actually built those out in Excel, and it was 2 or 3 people first, and then kind of 4 or 5. It was excellent small team. If anyone's watching this today, hello, and you did an amazing job. But we started with these proof of concepts and then implemented them in the marketing automation. And then it reached its way to the core and then kind of was implemented across the credit union in various ways to help create value. Doing that with the technology we already had allowed us to show the CFO, CEO, that we can make larger investments in different software, whatever the technology may be. So start with proof of concepts and start with the tech you have now to see what value you can create if you're short on dollars to invest. Yeah.
That's great. That's great. And doubling down on that, is there any, particular area, if you both were to maybe give some advice to credit unions, and we can wrap with this, what would you say is the next best step? It could be, analyzing, your current strategy. It could be, looking at a certain process or technology or something like that. But if you both have, just one quick tidbit of advice, I would love to hear it.
Yeah, mine would be pretty simple. It would be put all of your focus, your energy, your resources on one thing, which is how can I help my member accomplish whatever their goals, priorities are. And the more you focus on that and the less you focus on what your agenda is, what you need as a credit union, like I said earlier, the success will follow, the more loyalty will follow, more members, are going to come to your credit union. So I would say that's my big advice, is just focus on the member, which really aligns with why credit unions exist to begin with. So
couldn't agree more.
Yeah, I would just sort of layer on top of that. So find out whatever you want to call it, your North Star, whatever that goal is. And then you only have so many resources at the end of the day. So if you're, I'm coming from the data, tech, marketing lens. If you need to pick one big project that you're going to work on, while at the same time, I like the idea of small data. Find a handful of small data projects that don't require advanced data knowledge, don't require tools much more than Excel, and start having staff across the credit union work on those mini projects. And I think you may find that, 4 out of 5 of those may fail, but one of them may make $200,000. It may also allow the staff to learn new data skills they didn't have. So I always keep kind of a handful of smaller projects going on in the background that kind of builds that data muscle within the credit union, driving towards member engagement at the end of the day.
I love that. That's great advice. Not being too overburdened by too many projects and keeping it quite simple, like Excel, to make sure that you're, proving out those concepts and ideas. Great. Well, I think we can end it there. Again, put a banner at the bottom in case you guys want more information. I would recommend you, of course, reach out to us for anything that you need. Follow Austin's podcast because it's great little tidbits of advice. Follow Kelly on LinkedIn, Twitter. I mean, he's got some great credit union information. But thank you all. We'll be, again, sending out a PDF copy of the recording and everything post the webinar. Thank you for joining. Have a good one.
Absolutely. Thank you.
Take care.